Thanks everyone for joining us this morning for the third webinar in a series that the APAC Financial Wellness Initiative is hosting this week in Financial Inclusion Week. Before I get any further and introduce our participants for today, I'd like to acknowledge that I'm coming to you today from the lands of the Wurundjeri people of the Kulin Nation, and I'd like to pay my respects to their elders, past, present, and emerging. So as you know, Financial Inclusion Week this year, the topic is inclusive growth in a digital era. And the topic that we've picked for our discussion today couldn't be more relevant because it's all about lending, and in particular, ethical lending. So without further ado, let me hand over to our fantastic co-host, Anna Pereira-Shaw from the RFI Global Group, who's going to be talking to Lili Sussman from Wisr and Samuel Philipos from BFG, and I'll let them introduce themselves in a bit more. So over to you, Anna.
Thanks very much, Vanita, and really excited to be here for this discussion today. I think, as Vanita mentioned, it's an important topic, and I think as we find consumers needing lending products more and more, credit does play an essential role, and both Lili and Samuel are doing work in this space, and it's really exciting to see more purpose-driven, more social-focused, ethical products that are meeting the needs of consumers, but they're being more customer-focused. And I think this is something that will become increasingly important when consumers are looking to make choices based on the brands that are on offer, especially younger customers. We know they are thinking about ESG and sustainability and just the values of organisations they're taking out products with, particularly a home loan or a personal loan. It's typically it's not always very short-term sign-ups, especially a home loan, that's 20, 30 years of a product. So consumers are making choices and they're looking into the organisations they're taking products with. So to have our two panellists today from organisations that are disrupting the market, they're thinking about how to do things a little bit differently, is fantastic. So I'll hand over to both of you to introduce yourself. Lili, I might start with you. If you can let us know about yourself and your role at Wisr, and maybe just something that you love about your role as well, that would be great to start us off.
Sure. Thanks, Anna and Vanita. Great to be here. I love this topic. So my name is Lili Sussman. I'm the Chief Strategy Officer at Wisr. And Wisr is a purpose-led fintech, which I'll talk to you guys more about. I love to share the work that we're doing. We're very, very passionate about what we do. And one of the things I really love about my job is that I've always been really passionate about conscious capitalism and the idea that wherever we work, whether it's in a for-profit organization, not-for-profit, social enterprise, whatever the capital structure of your organization, it doesn't really matter. What matters is what you do with all of your time and the team you put together. And I've had the privilege of working in government and not-for-profit, as well as in a variety of private sector industries and markets and organizations. And I just love working with a purpose-led team. And I love working on something that makes a difference, a positive impact. I love thinking about what that positive impact is, trying to define it. So I think, given that Wisr is a place that supports that, because fundamentally we're a purpose-led company, it kind of just is part of everything that we do. I just love that passion. I love that passion and purpose. It kind of gives me a reason to come into work every day. And I know my team feels that way too. So that's what I love about working in this space.
Great. And I think there's more and more people who are looking to work for organisations that they also buy into the company's values. I think that's something that, we don't always discuss. We're thinking about consumers making choices, but also employees choosing which organisations to work with helps with the sustainability of that brand as well. So I really like that idea of conscious capitalism, and maybe that we'll touch on that later, but great introduction. So thank you for that. Samuel, did you want to introduce yourself and tell us about your story a little bit as well, given this is a company that you've founded as well?
Yeah, absolutely. And super excited to be having this conversation. And Lili mentioned, working with purpose-driven people. And I get excited about having conversations like this because I think it has a lot of ripple effect on the future and the direction that we take. And just sharing ideas and being able to surround ourselves with people with similar values. I think for us, we're a purpose-driven, just to introduce BFG. So we were talking about it, Big Friendly Giant, Benevolence Financial Group, is a purpose-driven mortgage brokerage. And our vision is one day for us to, for every financial transaction that we make, to be people and planet positive. And by that, what we mean is it's beyond lending. So lending is one part of it, but lending/borrowing, transacting, insuring, investing, what if each and every single transaction could be people and planet positive? What could the effects be? We're in a space, in an industry that's very influential, that has huge impacts. And we've seen that time and time again. And so what if we could restructure think about things a little bit differently to change the direction that we're heading towards? I think for me, my story started when I was in a client meeting, and I had a couple in front of me, and they just reminded me of mom and dad, and they were super excited. They're going for their investment property. They're looking to, expand their portfolio. And I think the more interesting part of it was asking why. Why is this so important? Why are we looking to expand this? And the response was, we've got 2 kids, and we want to be able to pass on that property, be able to buy 2 properties so we can give them 1 each, so that when they are, old enough, they can get that support. And so it's just a reflection of how we think as parents, with our kids and our future, is just being able to get ahead so we can support our families. But I think where the tension was when I was recommending a particular product to them, when I knew that product wasn't necessarily the best for them because of various factors, and that just down the road there was a much better option. And so it's just that tension of like, man, I really want to help these people, and I want to, they're trusting me, and they're looking at me as well, and they're like, whatever you recommend, we're running with it. We trust you. And so it just got me thinking about the kind of person I want to be and what I wanted to contribute to. And so I know a few months later, I made a decision to, look at something completely different, and something that was beyond just the customer's best outcome, but it was looking at it from a 3-fold effect. What was in the best outcome for customers, communities, and our planet? What if we could tick those 3 boxes all at the same time? What could that look like? And so you'll hear me always say, what could that look like? Or what if we did that? And it was just, it's about challenging the assumptions that we make that, things have to be in a certain way. And so that's, sort of where we, what started us. And the idea of social enterprise, which is a business that operates with a social mission. So for those listeners that don't know what a social enterprise is, it's sort of social and enterprise. Social is the mission, enterprise is a business. But what if we could use business to solve a lot of our most, our global most pressing issues? And instead of relying just on charities, but being able to create something that's sustainable, that's effective over time. And that's what gets me really excited, is to be able to help clients buy homes, change their lives, the future of their families, around wellness and inclusion as well financially, but also beyond that, the ripple effect to the communities that we can help by redistributing our profits, and to the planet as well, based on the banks that we work with and based on how we operate as well in a sustainable way. So that was theory. But yeah, that's a little bit about myself, and yeah, super excited to be chatting with all of you today.
It's interesting. Something that RFI Global data shows is that when thinking about how can customers feel that they can trust their bank, or how do you build trust with customers or maintain trust, one of the things that really stands out is having products recommended to me that suit my needs rather than are most profitable for the bank. And this is something customers don't necessarily trust banks or lenders are doing. And the Royal Commission definitely didn't help with trust, and we're still seeing a bit of a recovery in that space. Although I think the pandemic was a good enough distraction that maybe it's not front of mind for consumers to the extent that it could have been. But the idea of how can we choose, or how can customers have products that actually suit them best? When thinking about fees and charges are one thing, but also just the way that it's structured, especially a lending product, especially a home loan that is long term, thinking about how can this suit their needs throughout that journey they're going through, rather than, well, it's the best product we have for their needs. It's kind of the best we can do. So I absolutely think that is something the customers are thinking about as well. So it's interesting that that's something you've really identified as kind of a trigger for you wanting to do something differently and really think about supporting customers in a specific way. So yeah, it's definitely, I think, something customers will be finding valuable, and also I think speaks to the role of a broker to an extent as well, being able to offer different products rather than being tied to what you as a one brand can offer. So great, thanks for that introduction. I think we're looking forward to learning more about both Wisr and BFG throughout this conversation. But yeah, definitely a great background to hear about that. Now, Lili, I might get you talking a little bit more about Wisr, and I wanted to start with, on the Wisr website, it has a loan that puts you in control, and the idea of lending, and we know lending plays a key role for customers, but what can you tell us about what Wisr is doing to improve financial well-being, and what can you tell us about the Wisr mission, so to speak?
Yeah, I mean, I really resonate with what you were saying, Sam. I love the people in climate positive goal. We do that as well. Wisr became one of the first climate positive fintechs. I think we were the first one in the sector, and I'm really happy to see a lot of others are following suit. But our overall purpose is squarely around financial wellness, which we think of as financial health, one and the same. And we really think the sector should be designing products that are helpful to people's relationship with money and should be improving people's financial health. And I think we can all see, having operated in the lending space and in the financial product space, that access to financial products can be extremely important and helpful in someone's lives. Sometimes you need a car to get to work, or if you need to consolidate your debt, so you can get back on track, you need to renovate your home, you need to get an education, it's a good investment in your future. There's a lot of really good reasons why you might need credit, but we don't think that borrowing money should be kind of a too casual transactional thing that's done without thought. It requires a robust consideration process, and it should feel as much as possible like an experience where you're making a good decision. And it, rather than sort of a scary, uncomfortable, rushed experience. And Wisr, because we want to improve your financial health, we go through extra effort when we think about lending to someone. We really try and ensure that people that apply for a loan with us can actually afford the loan that they've applied for. So we have to really ask, is it a good idea? Is it a smart decision for each and every individual based on their circumstances? And I think our business model is a little bit different in that we haven't designed it in a way that is trying to keep people in debt and coming back to us all the time. It's not built around getting you to borrow repeatedly like many of our competitors are when they operate in the space of personal loans. And we're really trying hard to encourage smart decisions and healthy behaviors. Let's say you've come to Wisr and you've taken out a Wisr loan and consolidated your debts. So you had, let's say, multiple high interest rate credit card debts and very hard to get on top of. And so you've consolidated them into one lower interest rate personal loan with Wisr, and you have a clear plan to get out of debt. On top of that, we then offer you free support and tools to help you get on top of your credit health and help you learn about and compare your credit health using data from multiple bureaus. And we encourage you to make free early repayments. And then we support you by giving you access to free features like roundups that help you pay off your debt even faster, along with that sort of encouragement, education, and monitoring your credit health. And so I think it's a multi-pronged approach. When it comes to debt, it's not only we take the time to make sure that upfront you are not taking out money that you cannot afford to pay back. And we want to make sure we're giving you a positive emotional experience when you're making that decision so that you can actually feel like, you have made a good decision, rather than undermining your confidence, because taking out debt can be a very scary, vulnerable thing and, cast a lot of self-doubt and worry. And so we try to make that experience different. And then after the loan, you get the loan, we try to encourage and support you with various free tools above and beyond other lenders to make sure that you're managing any debt as effectively and painlessly as you can. And we're also constantly innovating around behavior change more broadly to help you to continue to make smarter decisions and build healthy behaviors. So, we've been seeing some early proof of our approach. For example, nearly half of our customers that engage with our unique financial wellness tools are making early repayments. That's almost 50%, which is incredible. And we're very, very proud of that.
Yeah, it's great when you have that data as well to just show how effectively something is working. And I think those tools, such as just smart tools that allow someone to pay a bit extra. I know there's been work that some organizations have looked into around credit card balances. And if you actually allow customers to pay a tiny bit more, instead of 3%, maybe it's 5 or 6 or 7%, customers are happy to do that because it doesn't feel as overwhelming as pay your debt right now in full. If you can just encourage them to pay a bit extra and not penalize them for it, it can be really effective. And I really like the point you made about making borrowing a positive experience, because you're right, it's usually, particularly in the short-term credit space, usually there's an urgent need or there's a necessity, or it's not something that's necessarily pleasurable if it's consolidating 4 credit cards. Maybe buying a car might be a slightly different experience, or maybe it's really stressful because the car you have is broken down. And I think the idea of making sure the product works kind of speaks to what we were talking about with Samuel just now as well, making sure that they actually can service that debt. So beyond just serviceability though, is this actually right for them, or is there some other solution that maybe is less profitable for Wisr, but it's giving your customer a much better experience, which can have profoundly positive flow-on effects. So I think that it sounds really positive, and it looks like it's really, Wisr's seeing great growth. So it seems to be having good, successful effects there with customers resonating with the product and what they can experience. You mentioned that Wisr became one of the first climate positive fintechs. Are there any other particular highlights that you can share, from your time at Wisr so far?
Yeah. I mean, I think we're always trying to think about how do you be a better citizen as an organization and as individuals. So climate positive, that was just something that we felt we had to do, and not in a box ticking way. It was like, well, what does that really mean? So we went through a robust process. We do it every year to really understand the impact and second and third order impacts of our activities and measure them, and including suppliers and all of that. But even more than that, what we're trying to do is change consciousness. So we get our employees to engage. We partner with Trace, who helps us measure our emissions and also run educational kind of engagement campaigns with our staff so that everyone can personally measure their own personal carbon footprint, including outside of work if they want to. And then we can do things like personal pledges to small little behavioral challenges like eat 1 more vegetarian meal a week, or bike to work once a week. And they're all kind of little things, and it's up to each person what they want to do. But we just find there's a lot of appetite in the organization to learn about it and to adopt it. So we have done lots of things, like right now we're running a clothing swap right now at the office. We have worm farms, we've got composting. We've swapped out our own suppliers in terms of supplies at the office. So lots of little things that we're starting to see people do. And I think it's part of, these things aren't in separate domains, like, ESG and lots of these things that used to be thought of as very different and ancillary to a company's core purpose and what their core business activities are. We kind of think that they're related, right? They're related. As you said, like, how do you be climate and people positive? I think there's just more recognition the human is an ecological animal. Like, what is good for humanity is also good for the environment, right? If you could understand the two things are intimately related. And I think just taking steps to measure it, care about it, roll it out, engage with employees on it, rather than have it be like a sort of, I see some companies, especially bigger companies, like they have a department that does corporate social responsibility, and there's like a small team of passionate people, then everybody else who's in the core business doesn't even hear about it or has no opportunity to really engage with it as part of their work. So we try not to do that. And the same thing with every other way in which we're trying to be a better citizen. So Wisr just won, I think the AFR #2 best place to work. And I think we won an award nationally for leading in diversity and inclusion practice. And that's something we've done very, very intentionally to close our gender pay gap, to make sure we change practices. Like, we don't ask people when we're recruiting how much money they made in the past. Like, we don't do stuff that's just, that will perpetuate biases from previous organizations. All of those things I sort of feel are related in a way, supporting, voicing our support for the Uluru Statement from the Heart publicly, like all the things that we do in a way, like reinforce each other, the people, the climate. So I love that you brought it in and you're thinking the same way. I think consciousness is just recognizing that the human is here in a social network and has an opportunity with all of our waking hours to build more connection and build more positive impact. So yeah, I think, certainly with lending, it's important to do that, but lending is just one piece of the overall financial health puzzle as well. So I think thinking about financial health in the context of a human's life, in the context of a human being the type of animal that we are, in the ecological system that we are. It's a different way of thinking about what our role or what this industry is about. And I think more and more people are going to start thinking that way.
Definitely. And I think you're also touching on the role of demonstrating, values being embedded in an organization. I like the point you made about, larger organizations having a CSR team. There's a lot of companies will have a CSR team, tobacco companies, mining companies, there's opportunities to make things different. But when you embed it at the core, where this is the standard, we're not recycling one day a year on a special day. We're doing it because we want to and because you've bought into the values of the company. And, people naturally see good examples of what others are doing and, they're kind of motivated by that. And I think that really speaks to the culture as well, which I'm hoping becomes a bit more of the norm as well, less of a box ticking and more of a expectation. And I like the things you mentioned around the hiring as well, starting from when you're bringing people in, setting the standard as well, really helping with that longer term change. And yeah, all of that, I mean, it sounds really positive and really speaks to, I think, social impact, which was similar to Samuel, what you were talking about with kind of the story of setting up the business and what inspired you. And I'd love to know what some of the key learnings have been for you, and particularly given it, your business is, it's been around a couple of years, but it's still fairly new. What have some of the highlights or key learnings been for you, would you say?
Yeah, it's been interesting. I think just to also link this back to what Lili was talking about was the idea of framing everything, or starting off from a perspective of how can we make our clients' financial lives better. And so then the post-management experience looks like this, the application looks like this, and so on. And, the idea of we don't need to maximize the profit per client for every transaction, but instead let's take a different approach around how do we support them through it. And I think that's links to one of the learnings that we have around, hearing the words "it can't be done" is a key thing that we hear all the time, and it's just an assumption. And so a lot of times it's zooming into that to understand what are the core assumptions behind it. And so one thing that I've learned, and something that we're adopting in the team now across the whole team, is, every time we hear "it can't be done" is that shouldn't block us from being able to progress, but it's actually dissecting it. I think the second thing that we've learned as well is, which has been an interesting insight, and of course it sounds like a no-brainer, but social impact is only one part of the equation. So the people part, or even the planet part, and I love how they're connected. And like Lili was saying, they are, if you sort of research them, the effects are in both. But it's kind of trying to find the three combinations that we always like to look at. It is around the customer's needs come first, and how do we find that product that best suits them? And then as a result of them doing business with us, we can then have a bigger, more positive effect. But first and foremost is the customer, making sure that they're in the best position. And yeah, I think the last observation that we're seeing is consumers, particularly millennials, which is a huge demographic for us, our target market, our primary target market, is that there's a lack of trust with bigger institutions. And this has been ongoing for quite an extended period of time. And sometimes they feel like they don't have any alternatives, but that's not the case. And we're learning this with more fintechs coming into the space around that as well. So I think that's also been an observation that we're seeing as secondary data, but also when clients come to us around the ethics and requiring that part of their requirements. I think the highlight has been obviously the impact. It has been able to say, we started off with no funding, is just bootstrapped, and there's a few of us, and now we've grown from 2 people to 9 people, and just the partnerships that are happening has been very, it's been exciting. It's been energizing to, we're now partnering with some organizations where someone might think, how did those two connect? They're not even in the finance space, but because we have the same values, and there's some value creation that we can create together when we have the same values and the same mission at heart. Where ESG or CSR isn't just something we do on the side, but that's who we are. That's why we've started. That's the end goal for us. Is to make that normal. It's for one day to think about, we talk about ethical lending. Most people are probably going to say, what is ethical lending? The goal for us is one day for ethical lending to be the norm, to be expected as part of, that process. So learnings wise, there's been a lot of exciting things, but I think a lot of more organizations like Wisr as well, that are heading towards that direction of, we want to make an impact, and we know it's important. We know it's critical. That's what our shareholders expect. That's what our clients, customers expect. That's what our communities expect, our stakeholders. And so it's exciting to see that, to see what the future will look like as more of that expectation comes to fruition as well.
Absolutely. And, you mentioned millennials are a key target market. And I think that's something that has been overlooked in recent years. I know there's a lot of conversation about, millennials don't think they can afford a home. They don't want to buy a home. They're focused on other things. It's not actually true. And I know at least what we see with the RFI Global data is when we look at savings goals, customers under the age of 25 are continuing to grow as the group, saying that a home is their top savings goal. Customers are saving for a home. They want to have a home. It's not the great Australian dream no longer exists. People want to own property. And you mentioned that in your introduction as well, Samuel, with you were speaking to parents who are trying to set up the future for their kids, and intergenerational wealth building is really critical as well. And property is a strategy for that. And particularly when you've got people who have either moved here from overseas or they haven't had wealth in the past. They're the first person in their family who's actually been able to accumulate some money, and they want to set the family up. When they have kids, they want to have some solid foundations that they can pass on, because they haven't had that themselves. And I think there's a real opportunity, and property has a key role to play there, and making it accessible, making it feel like an even playing field. And you've mentioned that the trust with the major banks, we don't see that there's a lot of inclination to just go with the biggest bank. If there's opportunity to choose a bank that has a better product, or maybe they're online only. Up is launching home loans, and they have a great reputation among customers from the age of 16 onward. And there's new lenders that don't have legacy that customers are really drawn to because they're customer focused. And kind of leads to my next question, just around how both of you are working in spaces that are focused on customers. You're focusing on products meeting your customers' needs rather than sales targets, which I think is really quite critical. And you're thinking about customer value coming from good relationships and building trust by offering products that meet needs rather than make the most profit for you. And I'd love to know what you think about, you mentioned, Samuel, that you hope ethical lending just becomes lending, that all lending is ethical, which I think is fantastic. And, of course, would love to see that. Same with CSR being core rather than side functions. But what do you both think in terms of the broader need for change among these legacy providers? And do you think this will just start to naturally happen as customer expectations shift, or as they start to experience, the likes of Wisr and BFG or Up, or, more digital focused brands, or the disruptors? Or do you think that it will take a bit more time for that change to happen? I mean, Lili or Samuel, would one of you want to start with what you think about that?
It's interesting, like chicken and the egg,
Yeah.
Who's going to change first? I feel like Margaret Mead said it best, never doubt that a small group of thoughtful, committed citizens can change the world. I sort of think it probably takes a few small but mighty organizations to start influencing on both the customers and the sector more broadly. Malcolm Gladwell, and there's a lot of academic literature from different fields around this, how social movements and trends will hit tipping points. And it's hard to know when that point will be, but it does happen very often. And I think, there are more and more purpose-led fintechs in the years that we've been operating. In the last couple of years, there's a lot more organizations that are speaking this language. And the evidence around purpose-led companies creating more shareholder value is also becoming much more apparent and undisputable. And so I think, there's going to be more organizations who are trying to create very different experiences for customers. And you just have to hope that industry leaders and people who have, just not because they don't care about the world, everybody's trying to do the right thing, but, who are just sort of doing the status quo and heading down a different track will notice and get inspired to switch directions and join the group that is kind of building a different model. And I think change is about normative diffusion, which is the spread of ideas amongst individual people. So I do think this spread can happen among customers, but it can equally happen among product builders too. And ideally, it's both, but then the network effects kind of just starts taking off, and then you get the tipping point. So do I think that people and climate positive demand is there. There's no question. I mean, all the consumer sentiment research says that. You know, how fast is it going to tip and transform our industry, which is probably one of the laggards in, you know, responding to some of these consumer trends? I don't know when, but my hope is ASAP, right? Let's get this conversation out there. I mean, like, there is a way to build better business models. Like, that's what the evidence says. Figure it out. If you haven't figured it out, change your strategy. Maybe think about now's the right time, you know, make this year, next year, make it the year.
Yeah, absolutely. And I think there's potentially a point that we've touched on around if organizations become more purpose driven and people start to work for these organizations, you know, that also has an opportunity, even just the younger generation joining organizations. They're going to be choosing companies for their first corporate jobs if they're interested in that sector, and they might be choosing the smaller purpose-driven organizations, and that can help drive change. Or maybe, you know, there are a few people who are starting to see what some of the fintechs are doing and thinking, why aren't we designing products that are like this? So it's probably a few different opportunities there, but it is interesting to think about how that change can happen. And I suppose it's hard to predict exactly when. It could be, maybe it'll be next year, maybe not. But, you know, financial services has the opportunity to move quite quickly, I think, but we'll see, I guess, who's driving that change. But Samuel, did you have any comments you wanted to add to this?
I think Lili covered it well in that description and her response. I think something to note is, you know, the GFC happened as a result of the financial industry, the Royal Commission and the findings of that as well. You know, even till today, some of those major banks are being fined for charging people that have passed away fees, and so it's kind of it shows us the effect of going the other direction and how far that can affect all of us, how negative, you know, the significance of the impact on us. And I think, as Lili mentioned, you know, the trend at the moment, especially with millennials, et cetera, is the different direction. And I think for real change to happen, it's going to have to happen at all levels, right? From a consumer level, from a startup level, from disruptor level, from some of these large scale organizations as well, to come to the table. And so if we exclude some of those large scale organizations or the bigger banks for what they've done in the past, I think we don't move forward, all of us together. But it's also finding that fine balance between, you know, greenwashing or claiming, using that kind of language of purpose with the intention to still maximize profit. And so, you know, when we look at the financial services industry, which is a bit of a sort of a critical perspective on it, is the structure itself is centered around how do we maximize profits for shareholders. And maybe it's time for us to look at things a little bit different, because that structure itself, even, you know, from a growth point of view, it's not going to attract more clients or more customers as we continue to head towards the other, you know, the future direction. But I think it'll be interesting with conscious capitalism, with, you know, the triple bottom line. How do we readjust our expectations around making sure there's some reasonable returns coming in, but it's more balanced, and that not everything, you know, is conflicting, but how do we kind of navigate that? And so something in the social enterprise space that makes it a little bit easier for us, relatively speaking, is we don't have that friction, because we know why we're created. Our financial model and our investment model isn't built to maximize profits. So it just kind of calms down, alleviates a little bit of that pressure between what's best for us and our customers, what's best for us as a company and our team, what's best for us and our stakeholders. And how do we change that perspective, that language around, let's just add value to whoever we come across. We just want to add value to them. And we know that, you know, as we continue to grow, et cetera, people, humans are reciprocal, and we will tend to see more loyalty. We will tend to see more word of mouth. But ultimately, it's not about maximizing profit. I think is the key message for us, is coming to that understanding of, you know, we're resetting expectations a little bit so that we can really change directions.
That's one really good point around accountability, firstly, with all the consequences. So we're speaking about, you know, the positive, the future of financial services being more ethical, being purpose-led, being customer-centric, CSR being at the core. And there's the other element of how do we limit the bad behavior that really harms customers, or is, you know, even from, if we think about financial stress, that has profoundly negative effects on customers, and it has effects on their physical health. You know, there's these flow-on effects that are unbelievable. And are companies being accountable enough? Perhaps not. You know, the Royal Commission has definitely we've had more conversations about what needs to be done, and there's still plenty that needs to be actioned to actually address those findings. We had a bit, as I mentioned, the distraction of the pandemic, but there's still a lot that needs to be addressed in that space, and the accountability that's needed is a tricky one. But also the concept of greenwashing is another great point, because as we see more genuine ethical players in this space, other larger providers can capitalize on that by saying, oh, well, we do this. And, we have to be careful that it's not just a distraction, and that we start to see genuine efforts rather than, this is what we do, we donate this amount of money to this organization, which is great, but is it core to what they do, and is it having flow-on effects, or are they minimizing harm? So, I suppose there's so many angles to it, and there's no quick fix to any of this, but it just speaks to the potential for the industry to need quite a shift generally, and for leaders in this space to really be driving those profound changes across many components, and within the smaller groups and the larger organizations as well. So lots to think about there. I wanted to touch on the digital topic, given Vanita did mention that it is a digital focused week for Financial Wellness Week, and Lili, Wisr is operating in this space. There's the financial wellness platform that you've mentioned. You've mentioned some of the tools that you provide to customers, and you've mentioned that it has had an impact positively on customers who engage with these tools. What do you think, or what would you say the key strengths of this platform that you offer to customers is, and what do you think the role of innovative digital offerings and solutions are to financial wellness in our sector?
Yeah, it's a great question. Wisr started experimenting years ago with credit score education and debt and savings roundups because we were really focused on the topic of debt and financial wellness around making smart decisions when it comes to credit and debt. But looking now around at the market, these tools are tools that others have started to copy. So I don't think they're market leading or innovative anymore. But we've got 650,000 Australians in our platform today. So they've been drawn to what we've offered, but our job is to keep offering value and keep innovating and keeping our eyes on the ball, which really means coming up with deeper, more effective solutions to genuine financial wellness and financial health. We don't think that that's a mathematical problem, because money is it's not about dollars and cents. Like the research shows that, it's not this rational thing, because a human's not this rational economic agent or machine. It's just not biologically true. So we're trying to think about the human as a primate animal with a brain that's evolved over time, the way it's evolved, with the emotions and thoughts and neurochemistry that it has. I mean, we know that humans are fundamentally social animals. We need love, self-esteem, connection, security. These are things that companies that were pointed out during the Royal Commission didn't really understand, right? They're like, let's just design processes that treat humans like rational economic agents and everything will be fine, not recognizing that very often it's the emotions that cause the great financial stress. The fact that I wasn't able to speak to someone on the phone when I was stressed, the fact that I didn't get treated as an emotional creature. So I think, money for us, it's a resource that all of us need to use well in our lives. And it's just like health, time, energy, anything that can help us with love, self-esteem, connection, security, the things that we all want and the lack of which, and the underappreciation of which really makes it harder to get what we need. And so I think the role of a fintech and being a tech company, we're looking at how to use tech and digital and scientific advances to bring together a multitude of disciplines, whether it's financial services or it's healthcare or other fields, to help understand and build fresh innovations that are going to serve human financial wellness in a deeper way. And it's one of those wicked problems, right? We talk about it a lot in the culture. We acknowledge it's very important in our own day-to-day lives, but there's very little clarity around it. Like, what is human flourishing in financial health? Really, what is it? And what are the solutions that we as an industry could possibly innovate for it? I think we're just at the very beginning of this. And as a tech company that's been leading the sector, we 100% feel it's our responsibility to be at the vanguard of this. So, we see financial wellness and financial health as the next big frontier, and something that we can tackle using science and technology. So it's an opportunity for all the innovators out there that I hope to see more and more people pick up.
I love that, especially just thinking about what people are like and thinking about the human experience and, you know, assuming that, I mean, when you look at research on how customers manage money, most people don't use a spreadsheet. Most people aren't really engaged with third-party apps that screen scrape across their 6 banks. You know, most people just have a rough idea, don't think about it at all, because every time they open their bank balance, their heart stops, or, you know, they use a pen and paper, or they check in every so often when they get the thought. And managing finances is stressful, especially looking at debt. But we know that when customers have a better understanding of their ingoings and outgoings, and if you know your debt is X amount because of your credit card and your car loan, and you know your income enables you to service this much, and you know you've got these savings, and you can get an understanding of, actually, in 5 years, I could have saved this much. Maybe I can buy a home, or maybe I can fully pay off this car, or maybe I can close one of my credit cards. It gives customers that ability to be empowered, but it's about their own situation. And I think the need for really personalized information, whether it's through digital offerings or through financial providers and brokers that are trying to help the customer rather than just get them on to the next product and the next product. So yeah, I think there's a lot of opportunity there, and I think it's exciting to think about, but I can definitely see the value in thinking about humans as humans who are emotional and not necessarily thinking about things in the most, you know, they're not accountants. Most people don't think about finance.
Oh, yeah, of course not. Yeah,
Yeah.
like it's just not natural to think about it that way, you know, and all this emphasis on numbers and how much could I have saved and what's my debt, like that's not how people really think about money, right? It's really like, I don't like my job, but can I afford to quit? You know, I'm really worried, like, should I be spending money sending my toddlers to these ballet classes that they don't even like? Like, am I depriving them of valuable development, or am I tiger mothering? You know, should I say yes to my kid? You know, how do I talk to my partner about money? Like, money is not, it's not a dollars and cents thing. So I think, you know, we're not necessarily approaching it in the right way. And if we really understood a little bit more money in context of people's lives, it would look very different what we're offering as a sector. Like, just, I think there's so much scope for exciting innovation.
And recognizing the role that money plays as well. You're right. It's, you know, money is stressful. I think there's very few people who love thinking about money, and it's not necessarily a wealth game, because, you know, usually your lifestyle adapts to your wealth, and you can be just as stressed about your finances when you're on double the income to someone else. And there's a lot about upbringing and culture and various factors that influence how you think about money. But I think, yeah, helping customers just feel like they can make decisions confidently, which speaks to the financial capability aspect as well. And I think one of my final questions, Samuel, is thinking about, you know, we're speaking about the role of money, and you're operating particularly in the home buying space. And we know that's one of the biggest purchases that a customer will make. It is arguably one of the most stressful experiences they'll go through in terms of taking out a financial product, because it has that profound implication of, am I going to raise my family here? Is this going to be where I take my kids? Is this going to be where I live by myself or move with my new partner? And, you know, what do you do to help customers with that experience? And, you know, is there anything that you think that is working particularly well to, you know, just give customers that genuine support in that process?
Yeah, it's a great question, and we usually joke around when they come to us saying, "Are you sure you want this? Because it's a 30-year debt." But you know, power of finance, right? Finance can help us move ahead, get ahead financially, and we know with property prices in Australia, particularly over the last 10, 20, 30 years, there's been a lot of wealth generated through that. And so understanding in perspective, you know, there are times where debt or finance or borrowing is a good thing that can help you move forward. But I think the approach we take around affordability as well is the bank's borrowing capacities are one aspect that we look at. But I think the other is understanding their current lifestyle, understanding them on an emotional level, understanding what their goals are for the next 3 to 5 years, to the next 10 years or so. And being able to come up with an amount that then fits that criteria rather than looking so much around how much the bank will lend them. Something else that we do is always looking at sort of risk mitigation. So risk mitigation might turn a lot of people off, but all we're trying to do is work out, okay, if you were to lose your job, what's our plan there? If, it's not about if something does go wrong, it's about when it does go wrong, how do we make sure we've got something in place to protect us, particularly if it's there's families involved in it. So it's about making smarter financial decisions. And it's about also understanding that, the first time buyer is looking to buy a property, it's usually unlikely that you're going to buy a property or a place to live in for the next 30 years, particularly with property prices and so on. And so it's about also looking at things strategically and working out what's my end goal, what's my end point, and then bringing it back to today to work out a plan in place that makes sense to support through that. So I think the advice matters, and that's where, having the integrity, having the right intentions behind it as an advisor, as someone supporting those people is critical, because it's not about the short, the quick wins for us and maximizing how much we can lend. Rather, it's about stepping aside and saying, that person's like a friend to me when a client comes to us, and they've got a family just like mine, and I want to make sure that I can do everything I can to put them in the right position. And through that as well, through the experience as well, I think is aside from the advice, it's the emotional support. We get clients that are going to auction and they're stressing the hell out. And so over the weekend, I had a client going to auction for the first time, and just being able to be able to support him through that as well, while the auction is going, texting him, calling him, and just supporting them through that whole process, through that whole experience, of saying, you don't need to worry. You've got an expert on your side that cares about you, and we're going to do everything we can, to support you in the best way we can through this process and even after the process fund. So, post-settlement experience, how do we help them pay off their debts quicker, so that they can, be able to move ahead as well. So I think a lot of things play a part, from the education, from the advice, the emotions, like Lili mentioned, these decisions are emotionally driven a lot of the times, and making sure that we also are aware of the constraints or the challenges of emotional decisions and how that can affect us, and making sure that we support our clients through that, because ultimately, logical numbers or finances, it does matter to make sure that those Excel numbers add up at the end as well. So it's kind of finding that balance of both.
Of course, I love the ethical component to this, but I think even as a broker, that just sounds like the experience customers should be having that they're just not necessarily experiencing. And, even just as a baseline, what service can a broker provide? That just sounds like what customers need, because it is stressful and you want to feel like you've got someone who's there to help, not, like you said, just getting the biggest number. Because I think sometimes it's, you can borrow 500K. It's like, okay, great. I only need this much. Well, you might as well borrow it just in case you need it. And that could be an extra 10 years, the interest they're paying on that. But customers, they don't always understand. It's confusing trying to work out the implications of these products. And when you really sit down and calculate the interest, it's confronting. It's a lot of money, and it's more than you'd really expect. And it sounds like your team is actually thinking about the long game and actually thinking, well, how much do you actually need? And if this is a stepping stone, this isn't the house you're going to live for the first time. Maybe it's the apartment that you'll leverage in 10 years time to buy the house to raise your family. Helping them actually make the decision on step one so they can get to step two, which is not happening just yet. I think that sounds like, it speaks to, I guess, the ethical lens to what you're doing, but it sounds like a service offering that really should be the standard.
Yeah, and you'd expect that. And I think it's the being able to, in certain situations, we tell clients, we actually don't recommend we go ahead for XYZ reasons. And here's how we put a plan in place to make sure that we can get there in the future, because we know your dream matters and we want to help you through it. But it's making sure it's the right time as well. And particularly if job security is a risk, because ultimately they're taking on the debt and it's a big responsibility. And so how do we support them through it? But I think it all comes down to, that's why it helps when everything is super aligned in the organization, when everything is on the right direction. It's all heading towards the same direction. There's no tension internally as well between your CSR team and another team. It's about, I think, not a transaction. It's about we're affecting people's livelihoods. Whoever's working in the sector, we're very we're privileged to be working in the sector. We're having a huge effect on people every day. No matter what your role is, we're having a huge effect on their finances and their future well-being. And so being able to take that responsibility seriously, and being able to be aware of the consequences of the decisions that we make on their lives as well. I think that also speaks to it. But again, in terms of the advice, I feel like we're heading towards that direction. It is happening bit by bit, and it's great that we're heading towards the right direction.
I think there's been a really great theme throughout this discussion about both of your organizations are thinking about what customers really need and operating in a way that puts the customer first rather than profit, which in turn helps your businesses be sustainable, which I think is really unique. And it's also just really refreshing to hear about the approaches that both your organizations are taking. And I think it's also really exciting. And we've discussed the future opportunities in this space for younger customers who are looking for more ethical and centered organizations around social issues. And I think there's definitely I feel optimistic hearing these kinds of actions and initiatives and hearing what's happening. So I can't thank you both enough for your time throughout this discussion. And I'll hand over to Vanita to do a proper conclusion, but thank you so much for sharing your thoughts and perspective. It's been really great.
That's great. Thank you, Anna. And, Lili, Samuel, and of course, your reflections as well, Anna. It just makes me so pleased. I kind of stand back and I go, wow, a lot of what I've been working for 30 years in this industry and this sector is now starting to come true. So that tells you how old I am. But, I've been here working in this sector for about 30 years, and every 10 years, as you know, there's a business cycle and, there's a trend change. So I just tried to summarize that. In the first 10 years of my experience in working in this sector, I really tried to push the industry to move from the concept of financial literacy, where the onus is on the consumer to make a rational decision, provided the industry provides all of the information that's required. That was very much the attitude. And in order to change that, to get from literacy to capability, where there was also an onus on the provider to design products and services that met the consumer's needs, that was a big shift in that first 10 years. In the next 10 years, we really fought for the concept of financial inclusion, access to finance, and moving from just providing access to finance to financial health, where it was the obligation of the financial system to make it easy for consumers to use finance to improve their health. So that was a big change that happened in that sector, and there's a lot of work that we did across the globe. And then in the last decade, I think that what we've all realized is that the reason that we look at all of these, no matter how you define them, financial literacy, capability, inclusion, health, resilience, all of this is because we want to improve well-being. At the end of the day, recognizing that money is an important asset that can help you to improve well-being, whether it's physical health, mental health, or even your financial health. So it is just so pleasing to hear all of your examples coming together. And to me, as a teacher, it really pleases me that some of the lessons that I've been trying to teach have actually started making a difference. So I'm so excited to see the next decade, if I can last it out for another decade in this, to see how digital fintechs and social enterprises are leading change. So thanks again to all three of you. I'm so excited that this is going to be shared during Financial Inclusion Week. We couldn't have asked for a better audience. So thanks again, everyone. I am so delighted to be closing this webinar.
Thanks, Vanita.
Thank you very much.